All right. I guess first of all, I really have a late start today. So I just got onto the market now, 2 o'clock. Didn't really have much of a bias, but I was looking close to that sell side, um, down into the 4 hour order block, which I'll show you a little bit later on into the video. Seems pretty okay. Um, if you guys notice, there's self-help liquidity at the relative equal lows, somewhere down at 2104, if I'm not mistaken. That's kind of what I was aiming for. It seemed to be quite a clean trade. Generally, I would have wanted to see it start to pump down, possibly around 230 or so. Um, no, Daniel, we'll see. So I'm using these relatively equal lows because draw and liquidity will always be where price is the cleanest. Always keep that in mind, and we'll most likely cover that in the future. My idea here is that if price breaks above that fair value or that inversion fair value gap that I just created, would put me on the worrying side. Um, my entry was based off of that inversion fair value gap. So the idea is that I take the inversion fair value gap. If price gives me an opportunity, I'll scale in another order. I'd like to keep it around one and maximum two contracts. I am simulating a $5,000 funded account, so I generally want to take it as easy and as slowly as possible. 20, 50, $100 trades here and there. Um, so yeah, that's about that. Um, we wait. For now, I really didn't expect price to take so long to deliver on my move. Let's fast forward to the good stuff. I would like to stress the fact that this is a paper trading account. I don't want anybody thinking I'm trying to mislead them in any way whatsoever. This is a paper trading account. I am doing this for my own personal journey. I'm journaling everything I'm doing, and hopefully along the way I could teach people a little bit of what I've learned. I'm not a professional. I'm not the best trader out in the world, not yet at least, but I am getting there. So generally, the whole page, or rather the whole platform, was created so that I can hold myself accountable for trades that I take. I have this terrible tendency um of over leveraging, over trading, revenge trading, etc. So I'd like to keep this as a fair reminder that I don't necessarily have to. And I hope if you're watching, you can take the same advice and take it easy on your trades. You do not have to over leverage, especially when you're trying to pass those funded accounts. Take it easy, trade one day at a time. Take two maximum trades a day, maybe even three if you feel that confident. Um, and I mean, a loss is a loss. Take your losses, go home and try again tomorrow. The market's not going anywhere, and God willing, you're not going anywhere. I started getting slightly worried, um, concerned about price closing above that fair value gap. It makes it a little bit harder for my analysis. Once it starts pushing above that, I'll be more inclined to either cancel or reverse the trade, um, expecting price to hit my stop loss. Look, obviously, I want to see exactly how it reacts on that fair value inversion fair value gap if it does actually go above it. But at this current point, I guess I'm just waiting and I'm going to see how price delivers. As you'll see, man, I switched through quite a lot of charts, going through daily, 4 hour, 15 minute, 1 minute charts, 5 minute charts. Um, my preferred trading chart, I think, is around 1 minute, 5 minutes, 15 minutes, 4 hours. Daily charts are necessary, period. To keep track of your trades, you don't necessarily need daily charts to have a bias, but it makes it a lot easier, especially when day trading, and when you're just learning. So we like to keep it as safe as possible. ICT always teaches things your bread and butter trades. It's the easier the trade, the more likely that the trade, the more confident you are, trade, the better. Jumping into a trade that is not all that definitely feel comfortable about taking it. So it's never really worth it. You'd rather just leave that on the side, study it, put it down on your journal, and use it for future references. Happy to see that price is actually pushing down at this point. My anxiety um, is reduced a little. As you can see, the ADHD starts pulling through, and I start swinging around chart to chart. But it's just being confirming and reassuring that my trade is still going in my direction. You see how nicely it's playing around that fair value gap. It's meeting it hit that fair value gap's consequent encroachment quite well. There's my second entry. That's me adding one more contract. A consequent encroachment is the center or 50% level of a fair value gap. Inversion, fair value gap, PCCB, all the same. Usually when you see, if you're bearish, you'll see price hit that fair value gap, and if it doesn't close above it until it's right below that consequent encroachment, it gives you a higher it gives you a higher bias to go bearish. Obviously, you're looking for other confluences, but this kind of puts you up in the right position. At this point, I'm busy screaming like Tanya trades. I'm busy going, show me the paint, bro. Show me the money. Buy myself a nice paper Lamborghini. And vroom vroom, motherfuckers. partials have been taken. So at around this point, I mean, I'm quite flexible enough to move my stop to break even, or as close to break even as possible. Maybe a couple of pips above, possibly just underneath that fair value gap. The reason I can do that is because those lows that you see on the left, the relatively equal lows you see on the left, they have been taken. Um, at this point, I'm pretty comfortable with letting the trade do whatever it wants to. I think at this point I had about $14 in profit, and now we wait.